Hey, welcome everybody to the 40 Finance channel. It's an interesting day today because we have AMC stock back in the news. Closed yesterday around $30 or so, and today we're all the way up to 60 some odd dollars, $62.35 while I'm recording this. And these are fun days in the stock market, to say the least, to see this kind of activity, particularly on AMC stock that doesn't have like a huge short position or anything like that. Full disclosure, I own 0 shares of AMC, but I do watch this kind of thing, and I've never seen anything like it. With GameStop's still hanging in there. I forget what their price is these days. $278 on GameStop, 62 something on AMC, just absolutely defying gravity across the board for all these stocks. So I just thought it would be fun. This is not a case of fair value in a traditional sense. Obviously, this is 100% momentum. This is 100% like group buying, coordinated activity. But just for fun, let's take a look and see if we can come up with like the fundamental fair value of AMC stock. I was kind of clicking through some stuff today and just sort of laughing to myself. And so I thought I'd take you on the journey. We'll see what the fundamental value of AMC stock is. As always, after we go through this little quick exercise, I'll answer questions and potentially look at some stocks for you guys if you want my opinion on them. So I hope everybody's doing well and enjoying this little bounce back that we're having here this week. And so let's hop in. And we'll bring up the chart. This chart is the 1 day. So what did we start this morning? $36. Peaked, it looks like around 72. Settling out here with about an hour and 20 minutes left to go. Let's see what the full screen view looks like. Unbelievable. You've actually had 2 peaks of RSI. What is this, 1 year? Let's just go year to date. So year to date RSI is at 95. That is higher. This little thing's in my way. Oh, darn. I just lost the RSI. Anyway, RSI was at 95 on the year-to-date view. There's no such thing as 50-day and 200-day in a situation like this. Maybe if we switch to 5 years, yeah, we're still way out of the range of that. And it looks like, to start the fair value discussion, if you go back to 2016, you did have a price of $35 for AMC. 2016 would have been probably a better time, without me knowing the whole history of the company. Probably would have been a better time for movies in general. Obviously, COVID and whatnot, you could argue that this is the worst time the movie theaters have ever seen. But let's take a look at some historical information. 1 second here. Switch over to annual. Kind of break this out a little bit. All right. So this current tab was only updated on May 30th. So this is not the real price to sales. Whatever the price was on May 30th, you know, you're at 11x on May 30th. Was that Friday? Just out of curiosity. Yeah, that was updated after market close on Friday. So this doesn't even include Monday's run. And you're already at 11x sales. You can see that historically, I think we identified the 2016 as a good period. You had a 1x on price to sales during that time. You had a forward PE of 27, trailing PE of 26. I don't believe that AMC will be profitable anytime soon. So we're pretty much going to have to lean on a metric like this, price to sales. I mean, you could get into enterprise value if you want to, but anything that's going to calculate off of the market cap is going to be wildly misleading in this case, because the market cap for the stock is in a weird place since it's gone up so much. I don't know if this is live, but it says 28 billion. I don't know if that reflects this price, but don't forget that any EV ratio, enterprise value, you're taking into account market cap. And in this case, that is a metric that is being influenced by momentum as opposed to a financial metric, which is based on profits and earnings. Hey, Lion, thanks for testing the chat out. All right, so just for fun, I'm going to start over at TipRanks because I thought this was a little entertaining. TipRanks, of course, I use this service all the time on this site. I'm trying to adjust the screen. And here's your Wall Street analyst best. I always use best performing analysts in TipRanks. And you can see where these folks come in. So nobody with any sort of reputation has anything special going on with AMC. In fact, one gentleman, whoever this is, Alan Gould, came in and said price target of $1 that he reiterated yesterday. What's the headline? AMC Entertainment remains massively diluted, over-levered. Then you got a hold. This is kind of funny. 7 days ago, hold at 16. So, you know, whatever. You get the picture. This is definitely a penny stock in the sense that it's probably going to be under $10 almost for sure. Now, when we look at Seeking Alpha, which I use quite a bit to kind of chart out earnings and revenue for a company, trying to squeeze this in a little bit better. We'll just go down in the chart view. And for this one, the only estimates we have go out to 2023. EPS estimate this year of negative $3.50. Then in December of 2022, they get down to negative $1. And in 2023, minus 62 cents. So I'm guessing here, but on this type of pace, you would probably be looking at December of 25 at the best in order to get a positive EPS from this particular stock. Looking at revenue estimates, so if you know you're wondering how much money will AMC make this year, best guess right now, 2.5 billion. You do have a high, so a bull case of 2.7 billion. Looking ahead to next year, 4.79 with a bull case of 5.1, and 2023, you know, bull case of 5.59 billion. So with that in mind, let me go back to this historicals real quick. Adjust it. So we know that revenue, I need to think of a place that we would have that type of revenue that we can go back and check on exactly what happened. 1 second. Earnings, estimates, revisions. Darn, I can only get forward-looking revenue estimates. So I wanted to see when the last time perhaps that they made any type of money like in the neighborhood of $5 billion, because that would let us kind of get an estimate of where things would be. But I'm not seeing it here. Analysis, news, transcripts. Maybe there is financials. Nope. And this is a whole, actually I'm on the wrong stock. I'm on Live Nation, which I was going to use as a comparison. Give me 1 second here. Here we go. Revenues. All right, so we're talking about the fact that they might make $5 billion. It looks like they did that in December of 2019, certainly in 18. So knowing how many shares were out there, let's make sure it all matches up on the total revenue line. Okay, so knowing that the closest we have to $5 million is December of 2019, and that would be about the same in terms of the amount of shares that were out there. I know that they just released some shares to raise some money, so that would change the math slightly. But at $5 billion, you still had a pretty low price to sales if this is all apples to apples, which is really hard to tell sometimes. So if they hit the 5 million mark, you would get pretty close to 2019. Now, what was the price in 2019? That's the next thing we have to look at here. So December, see if I can get it on this little map. So approximately $7 in 2019. So just to make things super simple, we're going to say 9x. 9x of the price to sales back then, which was 0.15. I have to do that separately on a calculator here. 9 times 0.15. That's not bad, actually. So price to sales at $62.97. If everything I'm doing is apples to apples, is still barely above 1. So very interesting that even at $62, this one could go higher. I'm not saying that you should buy it higher for a fundamental reason. They've got a load of debt. But it is interesting to see that from a fundamental view, you could probably stack this up somewhere. And if you took the projected revenue numbers, and let's say you padded them, and you said movies were going to be awesome, everyone's going back to theater, nothing's going to stop it, you could probably make a little case for AMC at this price. Keep in mind, we have tons of stocks on the market right now that are 10x sales. 10x price to sales. So it'll be a while before AMC hits that. And AMC isn't necessarily growing. They're bouncing back to par. And I personally would be super surprised if par was the same par that we saw in 2018. But nonetheless, congratulations to everybody who has quintupled your money, 10x, whatever you've done. I'm rooting for you here on the sidelines. I can't get into this just because my brain doesn't work this way on momentum plays, but I am happy, and it's really been fun to see retail investors take over the market. So with that, I'm going to look over some questions, and it looks like with Lion anyway, hold the line, screw Wall Street. So Lion sounds like he's all in. I wish I would have bought some, but I would never have guessed the situation. Unless I can thoughtfully make a future for a stock, I definitely don't buy in. Tom Brady sold early. He refuses to chase. So if you made money, I don't think that there's any complaints about selling on this one. Any stock you sell that you make money, who cares? Chan Lee, Redditors are buying and holding the stock because of shorting. What is your opinion? Well, I can't argue the theory because of what's going on with GameStop. Like every time I think that saga is going to end, they do manage to cling on, and it just keeps riding. So why is GameStop at is it really at 200 some dollars? Let me just look real quick. Yeah, the stock's at 277. And I don't know what to say about that. I really don't. The only thing that's kind of interesting about it compared to some tech stocks, and you see the same thing with AMC, like, man, these price to sales, even this forward PE, it is, it's not off the charts. Let me think of a stock like Shopify that I think is overvalued a little bit. I like Shopify. I think the price, if you did not own a position in Shopify and you went to buy it today, I would argue that it is overvalued. Forward PE of Shopify is 333. Price to sales, 45x. Now, Shopify isn't going to be in nearly as bad of an income situation. So you see revenue of $3.45 billion, debt of only $1 billion, cash on hand of $7 billion. So they're very strong from a balance sheet perspective. That's something I have not looked at with AMC. So let's just do that real quick. Let's see. Revenue last year, $500,000 because obviously the world was closed. $813 million in cash and $11 billion in debt. So that's pretty big, right? Because even if they did hit $5 billion in sales, such that was projected in 2022, I believe, when we were on Seeking Alpha, you don't even have enough sales to cover your debt. And most investors want to see some combination of your cash on hand plus your revenue coming in should be well above what your debt level is, typically speaking. That keeps you out of danger. So now, does AMC have a plan, to work through that? I guess perhaps they can. But what gets dangerous, if you think about cruise stocks and stuff, what gets dangerous is I think most people are fine in today's world because creditors are sitting back a little bit. But as soon as the lease owners and the world comes back to normal, if people start calling on that debt for your cruise ships, for your rental agreements, for whatever it is that you borrowed, if they start calling on it, it can get ugly fast. And depending on how many cases you lose in a creditor court, then you have to sell assets to pay the creditors by law, and that's where you get into the bankruptcies and whatnot. All right, hey Andy, how you doing? Time to dollar cost average on Tesla. I didn't look at it today. Is it coming? I was always, hoping for that 499. It might be a little bit too aggressive. You're at 604. And from a 1 year perspective, actually 604, not the lowest price of the year, but it's very, very close. This is year to date, just year to date. So the lowest price was March 8th at 563. And it is trending down. So probably my $4.99 cost, to be honest, is just me being very, very hard on the financials. And you guys know how I look at those things. There is definitely a percentage of padding in today's market. So if I come in and do a stock analysis video and I say, it used to trade at 50 times forward PE. Today you're at 100. There's some version there with interest rates in the world that we live in and stimulus money where that 50 of 3 years ago is probably like 65 fair value today. So like a forward valuation. So with that in mind, Tesla's probably doing that right now. And if you're interested, it could be a good time. I still think, I don't know. I just feel like there's still this day that's coming for Tesla when things kind of temporarily fall out, right? Whether it's Elon Musk getting in trouble or some sort of recall or whatever, a car problem. I think that will be the time when people freak out, and that's probably the time to buy. Tesla's forward-looking fundamentals, I will say, are way better than I would have ever thought 2 years ago. They're growing earnings, they're growing revenue. So there will be a time for me, I'm going to wait till it's that weird day that people are like, is this it? Is the run over? And then I would probably buy in. But until then, I'm just invested in other stuff. All right, Lion comes in, looks like Palantir and Rocket are gaining a little momentum. DraftKings climb back to the 50s. You know, on DraftKings, I think you've probably heard it before. I would say expect flatness well through at least the beginning of August, if not the beginning of September, maybe mid-August. You need college football to start. That's when things will come back in the news. That's when they're going to have the next wave of states that come online. Ohio, where I live, was very, very close to getting things moving. But I'm going to show you guys something here, if I can type it in. Ohio. But they're farting around is the short version. Okay, well, we have a new update. So here's what I had been reading. Bill continues to tread water, undergoing some changes. Now I don't know what the hell this news source is, YogoNet. But let's just pretend that they are a trusted authority. They are saying that members of this blah, blah, blah expect an approval date of June 30th as the committee met again. No votes or action were taken. La-di-da, la-di-da. And then they started breaking these things out, these licenses of which type would be available. And for a second, there was a fight to get rid of the online element for the first year, which would have sucked. But you can see what's going on. A lot of discussion. I personally, June 30th sounds aggressive. I'm going to do another search here just to see if we can get any news. 3 weeks ago, 4 weeks ago, nothing really great. Legal Sports Report. This is a good website for actual facts. Ohio sports betting. I'm just trying to see if they have any updates. I don't see anything. Desire for sports equity. Who cares? All right. So anyway, back to the point on DraftKings. Let's just pretend that the Ohio thing happens on June 30th. So that's the bill approval. Then you got all this hustle bustle to actually make things happen, where licenses have to be issued, etc. If we're lucky in Ohio, I would say Halloween, Thanksgiving, Christmas. That's probably about the time that I'll be able to whip out my phone and actually place a bet. And there's a lot of states that are going through the same thing. So hang in there. If you believe in DraftKings, I do encourage you to look for dip opportunities to buy a couple here or there. And I know that for me personally, I wouldn't be surprised if you do see those dip opportunities over the summer. Once football kicks back off, though, I think that it goes up from there. In terms of the other ones, you had Palantir. I'm totally happy with Palantir. It's up a little bit. That's a stock that I will buy any dip, probably now under $21. Let's see where we're at today. $24.42 today. So I'm in the green finally on Palantir. I think that my cost basis was down to 22, and I got there by buying in the 19s and 18s, something like that. And it's long. I don't expect miracles out of Palantir, but I do believe that they have the technology to do something special in the next few years. Rocket is Rocket. I'll say on Rocket, as a note about the housing industry in general, so the lumber cost for new builds, and the obvious housing shortage that we're seeing right now where things are getting bid up. Real estate's is definitely the last bubble, big bubble that's out there. And even if that bubble bursts in terms of price, so if your house went up 50% this year, your house is not going to go to zero. Your house is not going to be worth 50% for the long term. That quick gain, it'll come back down to reality. But how do you have so much pent-up demand for housing that has pushed the prices where they are today? And how do we not see that transactions will continue to come in, right? If I was a young, let's just say married couple or whatnot, and I was ready to buy a house, and the first thing I would say to myself was, I'm not buying in these conditions. I'm going to, as soon as things come down, I'm going to go out, I'm going to save my money, and I'm going to buy as soon as the prices go down. So the concept of the housing collapse I have huge problems with. I think that it's a YouTube video specialty. I see everywhere housing crash, housing crash. I don't think housing crash equals transaction volume falling. If housing crash means anything, it means escalated prices go back to normal. Volume of homes sold, I would argue, will remain in an upward trajectory for a long time. That's very good news for people like me who own Rocket stock. Also, in terms of refinancing, which Rocket does a good job at, we saw interest rates creeping up. But now that these home prices have exploded, the refinancing starts to make more sense if you're doing that cash out for, you don't just want the lowest monthly payment, right? You have another incentive to refinance, and that is suddenly your home's worth $100,000 more, and you want to get some piece of that. That can reignite refinancing too. So once again, I'm defending Rocket. The performance hasn't been there. I'm holding the stock. I'm not selling. But there are more positives in housing from a Rocket/mortgage perspective than I think a lot of people are willing to admit. I don't know why there's so many housing crash videos on YouTube right now. I have no idea, because I cannot see anything but demand from my side of the coin. And if the prices do go down, I see demand increasing. I see affordability increasing. So, maybe I'm the dumbest guy on the planet, but I just don't see mortgage companies like Rocket being in a big amount of trouble right now. All right. Lion, look up LSPD, okay. Lion dominating the chat board, that's good. This light speed POS I think we've looked at before, but let's go over it again. This POS, if you guys aren't familiar, point of sale. So when you think about Square, has a point of sale system, mostly popular in restaurants and retail. When you go up to the cash register and you swipe your card, and the retail worker, types in on the computer, that is point of sale. Year-to-date chart, lots of ebbs and flows. Looks like the best time to buy this year was May 13th or so at $55. Let's see what's going on in the big chart. I'm really mad that my RSI got booted. Let's see what happens here. Then I have all these stupid color combinations I like to do. Sorry. There we go. All right, so RSI, 1 year chart, 57. You don't have a 200-day. You're above the 50 by a decent amount of money, by a decent chunk. Let's see our fundamentals. I don't think that this one has too many, if I remember. It's not profitable yet. Running 34x on sales. I think the best that I can do here, looking at revenue, 200 million on revenue, 800 million on cash, 55 million on debt. So they're in a pretty good shape balance sheet wise. I'm going to assume that the coronavirus killed a POS company. I'm just going to assume that. Let's see if anybody looks at it on TipRanks, and you do. Let me squeeze it in for you, Lion. Got some good news here from people, you know, arguably smarter than me. 7 buys, 1 hold. A lot of stuff coming in 12 days ago. A lot of stuff coming in 12 days ago. You have all buys, 1 hold, but even the hold's at 80. That's plus 13%. Nobody on this chart that I know specifically, as far as people I traditionally follow, but it's saying a lot of upside. Let's take a look at some of the future forecasts. So I like to look at earnings estimates. And these are consensus. So EPS, looks like it's just going to take them to March 2024 to go profitable, which is fine. One thing to note is that if they achieve this today, your forward PE would be 302. That's obviously a little high, but let's just go with price to sales. Here's your revenue, 100% growth in revenue this year, which is great. Plus 35, plus 35. You got a lot of good signals here from growth. That price to sales of 20 seems a little high to me. But, you know, I'd have to compare it to another POS company, and I don't know one. I really don't. So unfortunately, I can't say. My gut says, first of all, that you'll have a ton of opportunity to buy the dip because it's already had 1, 2, 3, 4 big dips. So I would be cautious that you're buying at the top here. My 2 cents, just looking at it. But those, I'll tell you what, the revenue growth over the future certainly looks strong if those analysts are correct. And then beyond myself, the guys on TipRanks were seem super bullish on it, so they could know a lot of things that I don't. And I'm guessing, again, that COVID killed POS sales. Now things are open. If you're dealing with bars, restaurants, retail, those things might be starting to come around market-wise. All right, last one from Lion. Michael Burry had a 500 million short position on Tesla. Kathy added 10K shares. Let's see who wins. Both of them could be right. I agree with both of them could be right. Burry short-term, Kathy long-term. In fact, I would maybe go so far as to say that Burry short-term, Kathy long-term would be the expected outcome right now, with the way things are looking for just market volatility. So that's my 2 cents there. Daniel's here, opinions on cash piles, valuation, bubble territory, risk of market corrections. What is your current cash percentage? Roughly 10% that I have right now. And I was buying a little bit. I did things I was buying and selling back in May, late May, and throughout April, May, I was buying those little down days. So we had a nice stretch in May where, and I say nice stretch, but a bad stretch technically, market-wise, where I was buying Palantir, Magnite, some Etsy was in there, things like that. That I was just averaging down, and I haven't bought, you know, we're 2 days into June. I don't believe I bought anything last week before Memorial Day here in the USA, and I'm certainly not buying anything on today's numbers unless I see things go down a lot. I would expect, either buy companies with EPS, with projected EPS growth. I just did that video on my take for the safest easy wins right now. The top of that list was Amazon, only because no matter what happens with the market, Amazon's EPS and revenues are going to be going double digits. And there's a lot of stocks like Amazon. I picked them because I already own them. So I would feel good about that. Anything you're buying that has seen wild volatility, we just looked at LSPD POS. I would throw Palantir, stock I own. I'd throw Palantir in there. Anything that is going to struggle to show fundamental bottom is at risk, right? Now, it's going up today, but we know what can happen. So if you have revenue, aka price to sales, if you have growing revenue and you have a growing EPS, there's this floor that you're never going to go past. It's just not going to happen. You could go lower. I could go negative on Amazon stock, sure, but I have absolutely no problem sleeping, because I know that eventually the fundamentals will come back into play, and Amazon's very profitable and they continue to grow earnings, and I don't see that changing anytime soon. So that's where you want to be if you want to sleep well at night in this volatility. And I certainly have other volatile names, but the best ones to get right now are growing top line and bottom line. Paul, why are Amazon stock prices stale? I know. I look at it as an opportunity. Why are they stale? I think some of it is because that this stock is, quite frankly, just sort of fallen out of favor. Things do go through cycles. If you think about Apple, it's probably the easiest one to remember. I don't know where Apple is today before I say all this. Apple down, yeah, a little bit, but Apple stock doesn't do roller coasters up and down like completely to drive you crazy, but they run in these announcements, right? 5G, new phone, new iPad, Apple Car, all these product announcements give it a little boost. They also had a stock split, so they get a little boost. And then slowly, like, the air comes out. So Apple goes up to this over expectation, expensive phase, if you will, where they're overvalued compared to historical metrics. And then it just kind of fizzles down because the buzz goes down. Amazon hasn't had a real buzz beater lately, okay? So I know they just bought the MGM. I think that's good. I like the purchase, but I don't think that it's like fundamentally changes the outlook of the company by any stretch, unless they start putting movies in like real theaters and competing for Oscars and stuff like that. So with Amazon right now, it's almost like a blue chip company in the sense that we're just wait every quarter for them to say AWS plus 50% in sales year over year, retail plus 75% in sales, right? That's what we're waiting for, the metrics and the fundamentals to keep pushing it above and maybe get some sizzle in there somewhere. I don't know when that's going to happen next, but I would say that you can use this opportunity to buy more. The next probably best thing on their radar is Prime Day, June 21st, 22nd. Prime Day by itself obviously has nothing to do with the stock, but depending on what kind of deals they have and what kind of things they do, what we really want to do is get to June 23rd, the day after the sale, and then they usually do a press release, right? Biggest Prime Day ever, blah, 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 blah. That's when the stock could go next. The other thing that could come into play that is always widely rumored that I think Amazon should really do, stock split. 10x stock split. Get that price from $3,200 down to $320. You could make the argument that they could split 20 times and get it to 160. If you want to get those little retail plays, retail investors playing on your stock, you probably have to lower the price. And that's an easy way to do it. So I think that day comes eventually. Certainly Google, Amazon, there's probably somebody else I'm forgetting. Those are the two ones that almost for sure should consider a stock split just to get their price down. Booking Holdings, I feel like they should as well. But anyway, hang in there, Paul, because I can't promise anything, but what I can tell you is the fundamentals underlying Amazon are very strong. There's only so far that stock can fall, and I think we have way more upside than downside as of right now. All right, Kevin, good afternoon from Lakeland, Florida. How you doing? Florida's a great place. We go down there a lot. A little bit better than Ohio anyway. Although we're past the winter in Ohio. Now, today is 67 degrees and raining, but typically here in Cincinnati, Ohio, this time of year is the best time of year because it's like sunny and 75, 80 with low humidity. And what's wacky about what's wacky about Ohio is you go to August, August is like about 90 degrees, 90% humidity, just like Lakeland, Florida, and you turn around in January 1st or, in the coldest part of winter, and the high is like 25 with a wind chill of like -5. It's ridiculous. Who the hell has those kind of swings, right? I think Chicago is up there. They're going to have those kind of swings. If you ever kind of watch, if you watch baseball, sometimes you're watching the Cubs and the ivy in the field hasn't even grown in. People are in their like winter coats in an April game. And then you look at July and it's like 110 degrees in Chicago. Like, I don't understand how the Midwest has those ranges, but they are definitely ridiculous. Let's see. Money Moses. Lion, hold on. We got a weather update from Canada. Lion says it was 94 here in Vancouver. Man, or 84, but still 84 in Vancouver is a lot. And I would picture, I've never been to Vancouver, but we used to vacation in Michigan, do a lot of fishing up in Michigan. Not quite Upper Peninsula, but up a ways on the Lower Peninsula. Those summers are typically beautiful. So you go up there in August, you have very, very low humidity, assuming you're out in not in a city, right? You don't have to be out in the boondocks, so to speak, but you go out to like a lake town, 75 degrees, no humidity, bright sunshine. Don't go there if you're scared of bugs. The mosquitoes are seriously like as big as my fist. That's mostly wings and arms, but Michigan is super nice, and I would have just have assumed that Vancouver was the same way. So for you to get 84 in Vancouver this time of year, that's crazy. All right, sorry, Money Moses. What's my thoughts on CLH? Best performing stock through all the volatility. I'm going to have to type it in. Celsius Holdings. Let's see what these guys do. You said you had a good run. And this is 1 year chart, so it doesn't go back to the very start of the pandemic. Let's try to figure out how well you've done. So if you're in April of 2020, it was 441. Man, you're up God knows what, right? Up to $77. This is interesting. You do have a positive EPS, which is crazy. Let's see what this company does. Develops markets to do calorie-burning fitness beverages, various flavors, la-di-da. Let's take a look at their website. All right, so here we go. Celsius Fitness Beverage. Very interesting. I've never heard of it, but this is just not something that I would typically buy. I'm sort of a Diet Coke guy and Coors Light guy myself. But first of all, congratulations on that run. Let's see what kind of stats we have here. 30s on price to sales. Forward PEs look a little high. Hopefully, though, if you've already made your money, then I don't know. Let's check on the balance sheet here. 1 million in debt versus 31 million in cash versus 152 million in revenue. So you're all good there. Short percentage is only 5%. This is interesting. Price to sales strikes me as high versus, just to give you an idea for fun, I own this company, TAP, Molson Coors. It's probably not apples to apples because they're alcohol, but I was just curious what their price to sales were because fundamentally this is a pretty sound stock. Price to sales of 134. So your price to sales is pretty high, but let's just see what they're saying in TipRanks. CE. Oh, I spelled it wrong. CELH. There it is. And you guys see there that Moses got in at 45, so he's plus 30. And you are arguably late to the party, but you still rocked it, which is great. You actually have some coverage here 19 days ago. So you got a couple holds and one buy projecting 92. You had a buy 3 months ago at 55. It's already eclipsed that. I'm curious on, daggone it, if I spell this wrong one more time. I'm curious what people are projecting for this company is what I was getting at. So let's see. We've only got 4 analysts covering. And you got, this is EPS projections, right? Through 2024, 14 cents this year, doubling that next year, 62%. So that's strong, but here's where it's probably 10 times as important. And you can see how only because this is a fast-growing company, revenue to 225, that would put current price sales at 21x. I don't know. The sales growth is impressive. Plus 70, plus 50, plus 42. And these guys could be wrong, right? These are people, granted they have more financial like education or background as analysts. I would just caution that price to sales is getting a little rich. If you love the fact that you've made all that money from $45 to 72 or whatever, 77, so you have made almost 100%, I would make sure that you take some money for yourself because I just don't know if it can stay at that level. One option that I've done in the past, I haven't done it recently, though, is to however much your investment was, right? So let's just pretend your investment was $100 and you made 75. So your total value is 175. Take out the 75 and let the 100 run, or vice versa. Take out your cost basis and let the profits run to infinity. So I honestly would probably do that if it was me. But you're in the driver's seat right now because you sat with this thing since 45, so congratulations. Their drinks are great and popping up everywhere. Yeah, I'm going to have to read about that. You're the first person to call that one out to me, so I appreciate it. Lion and NHL Playoffs. So Lion, I'm a Blues fan from way back. We don't have hockey here, we have Columbus Blue Jackets, and I grew up in Columbus, but I watched hockey way before the Blue Jackets came out. So I always liked Brett Hall and the Blues, and the Blues are out this year. I almost don't really care too much since they just won the Cup a couple years ago, but they had a relatively disappointing season. A lot of injury, just a lot of crap. And Bennington, I'll always be, Bennington is the Nick Foles of St. Louis, right? So Nick Foles, the Eagles quarterback who won the Super Bowl. But I think that was his peak, is what it's starting to look like. All right. What are some ways to invest in gold? Buy it. And I'm not being a jerk. I strongly encourage you, if you're into metals, hear me out on this, guys. If you're into metals, it makes a lot of sense to buy the real thing. I'm going to assume that none of us here are millionaires and you're not looking to buy a pallet of gold bars. But let's just pretend that you're trying to buy $5,000 worth of gold. Get the gold coins that are 0.99%, the brand new ones. You don't have to pay for the historical ones because you only care about the raw price of gold. And whenever you're comfortable, they make them in all denominations, right? That you can get a half ounce, quarter ounce, tenth of an ounce. Buy some at any coin store or online. You're looking for, I forget what there's like a premium on them. It's like some sort of spot price or something. I don't understand it completely, but you buy your coins here and there. You keep them safe somewhere at your house buried. And the beautiful thing that for doing that is you don't get taxed on the gains, right? So if this year we bought, if we were all together and we bought 100 gold coins and we put them in a box in our basement, and we woke up 20 years from now and they're worth 500 times what they're worth today, technically, you're probably supposed to put that on your tax return. But there's no receipts for it. You just take your gold stuff in and trade it for the fiat currency. So that's why I would encourage holding on to physical at a small level. I like to have things in my stock account because I like to keep stuff consolidated in a reporting format. But I honestly think that if you're the average Joe and you're trying to save money for your family or your mom or your girlfriend or boyfriend or whatever it is, I think you should buy physical and get a small safe. And when I say bury it in your house, I don't mean underground. I just mean hide it somewhere so that nobody is going to steal it. And then when you need that money, you take it to the same gold dealer and he buys it, and there's no tax forms, there's nothing. It's straight up. So that's my 2 cents on precious metals. All right, if you guys have one more question, type it in real quick. Otherwise, I'm getting ready to roll. I wanted to see where we're at on AMC. 63, so not a lot of movement, not a lot of more movement. One thing I am seeing is, just to call this out, if you have small cap names, like I have some, I don't want this. I want 1 month. The Russell's struggling. I mean, really struggling to hold water. And the only reason that that's important to me, most of you guys know I'm much bigger on the NASDAQ, but I have small cap stocks like PaySafe, Smile Direct, Rockets in there. So just keep your eye, like sometimes what happens with small cap stocks as a group is when people start to freak out and they think that the market's going to go down, or they get nervous. A lot of times the sell-off starts in small caps, and people will roll into FANG-ish type names because no one's questioning Google's balance sheet, will their earnings grow, etc. All the things I was selling you on Amazon. So just know that small caps are a little dicey right now. So we talked about the POS. We saw that that beverage company, and those are ones that if the Russell has a bad day, they're small caps, so they're going to get sucked into that game, and they could go down first, even if the stock is performing well. So just keep that in mind. Favorite 3 blue chips. Good question. And I need to see, like, if we go Dow 30 and components. Oh, that sucks. Let me see Dow. Let me try to find it, and I'll tell you which ones I like the best. All right, here we go. Oops. Ad blocker, I'm not going to support it today. So I'm just going to assume this list is accurate. I mean, it's on CNBC. Going down the list of Dow 30 and trying to be, let's just say, since you said blue chips, I want to avoid as much risk as possible, right? So I'd probably like to get a dividend, and I probably want to see a fairer valuation, if you will. And I'm eyeballing this and doing it off the top of my head. I will tell you that I definitely like Home Depot, and I can't believe that I don't own it. So that would be one. And I think Home Depot's future with this new housing world and more people working from home, I think Home Depot's future is very bright. It will never grow 50% in a year, but I do think it will have sustainable returns. If I had to choose one technology, I was trying to think which one it would be. I'm really leaning towards Microsoft because I think it's the most stable. I think that Amazon could grow more, but I just don't see how Microsoft goes down anytime soon. Visa, I own, so I'll throw that on the list as well. So we have consumer payments, we have technology, and we arguably have consumer discretionary / staples all rolled into one. I do not, so I like stocks like Caterpillar, but I typically don't invest in industrials. Okay, so that's one reason that wouldn't be there. If you made me buy a healthcare stock, it would almost for sure be Johnson & Johnson, but I don't invest too much in healthcare because I'm just not smart enough. I've said it before on the channel with pharmaceuticals and stuff. Man, people have made a ton of money off that. I've tried to read their earnings, and outside of the financials, it's all Greek to me. You know, what these molecular things are doing or whatnot. Just know that for me, where am I covered on that? Well, in my retirement portfolio, I have QQQ, which is top 100 of NASDAQ. It has several biotechs in it. I also have some ARK-K, which has several biotechs in it. And I have dividend ETF in there, which would include a stock like Johnson & Johnson, likely would have like a Pfizer or something too. So that's why I don't worry about it. In my individual stock portfolio, which is not, is a taxable account, is what I was trying to say. I only invest in the industries I know, and I'm always looking for higher returns. So somebody, are you short selling? Anyway, gonna ignore that. And Beach Life, what do you think of Caesar? Let me do something here. Okay. Caesar is a good gambling stock. Let's bring it up, make sure that we're both talking about the same thing. Got a little distracted by shirt sellers. Ha. All right, so here we go with Caesar. I don't mind this one. Vegas is already wide open. They do have a ton of debt, but I see the future is close, right? The future of volatility, fundamentals are already catching up. Forward PE under 10. Here's the big problem. We talked about debt a little bit today. $26 billion in debt, only $2 billion in cash. Planning this, this is trailing metric of $5 billion. Let's just assume it's going to be $15 billion, okay, in the forward 12 months. Then you are still not at your debt load. So I don't like that, but I do like their opportunity in the gambling space. I would probably lean more to MGM, only because I know that their gambling app or whatever has been very competitive. So that's just my eyeball on it. Let's see how bad things are at MGM debt-wise. So MGM's got $22 billion, but they've got $6 billion in the bank. They're a little bit better. I don't know that it's noticeable. Let me type these in so you can get another person's opinion besides mine. Oh, for crap's sake. Well, MGM. There we go. All right, so here's MGM, which I showed you, but you had asked about Caesar. You've got plus 20, maybe single digit upside for the next year. Let's do yours. Caesar, and these are going to be the same analysts because analysts are typically following industry. And to your credit, granted, 1 month ago, not as fresh, you have mostly double-digit upside for Caesar. So it looks like Caesar is favored by analysts over my pick, which would be MGM. I will say that if you're getting into it because you think it's a safer play or whatnot, just keep that debt in mind because there's other companies that are not carrying that around. But no doubt Vegas will be flying this year, if it isn't already. I haven't been out there to see the full reopening, but we know what's going on there. So, all right, guys, have a great day. And I appreciate everybody stopping by. So we will see you on the next one. Take it easy.